What's going on, guys? It's Andy here. Welcome back to another episode on the Andy Kandola Show. I'm going to go ahead and reveal my $150,000 stock portfolio. We're going to go ahead and run through all the different stocks that I have in this portfolio. I want to go ahead and share with you guys why I believe in every single one of these stocks, my bullish scenario around all of these stocks. Plus, we're going to go ahead and jump into each one of these pies. I have these pies broken up into the different sectors in the S&P 500, so I'll share with you guys why I'm convinced these are the best stocks to go ahead and invest in the stock market. So I'm excited for this video, guys. If you are new to this channel, don't forget to subscribe to the channel down below. And guys, if you like the transparency and you like this video, do not forget to smash that like button, as that's all I ask for the transparency. But let's go ahead and jump into it. Now, the current portfolio is sitting at $151,806. We are up in the last day $358. This is the highest this portfolio has ever hit. I'm extremely excited that we finally crossed $150,000. My goal with this portfolio is to get it over $250,000 before the end of this year. That's going a bit aggressive, but I'm dollar cost averaging into this portfolio every single week. Any money that I have from my paycheck, I am basically investing in the stock market. Now, as far as in the last week, the portfolio is up $2,985 or 2.01%. In the last month, the portfolio is up $3,281 or 2.26%. In the last quarter, we are up $15,784 or 12.43%. In the last year, we're up $17,191 or 18.90%. And then all time, guys, we are up over 30% or $21,000. Now, I do have this portfolio broken up into growth stocks. So as far as my growth from this portfolio, we've crossed $20,000 in growth, as well as I have earned dividends of $1,715 in this portfolio. So extremely excited about this. Now I'm going to go ahead, share with you guys all the different stocks and how I break this portfolio down. I feel like I haven't done one of these videos in a while, even though if you are keeping up with this channel, you will notice every single thumbnail that I have, I go ahead and share with you guys where the portfolio is sitting at, or the value of the portfolio is sitting at. But let's go ahead and dig into all of these stocks. Now, I have this portfolio broken up into different pies. I have my growth pie, which is basically all my hyper growth companies that I believe will at least 10x, if not 100x. From there, I have 25% allocated in technology. Now, the technology pie is different from the growth pie because these stocks are going to be a bit safer stocks. These are not hyper growth stocks. These are basically stocks that are a bit safer. Some of these pay out a dividend as well. Now, from here, the remainder of these pies are broken up into the S&P 500 sectors, and there's 11 sectors in total, but I do only invest in 8 out of the 11 sectors. But the remainder of these pies are all going to be dividend focused stocks. Basically, all these stocks to pay me out dividends. So I have this portfolio broken up into about 25% dividend stocks, 25% technology stocks, and 50% in growth stocks. But guys, the exciting part here, we're going to go ahead and jump into each one of these stocks. Now, as far as my growth pie goes, overall, I'm actually losing money in my growth pie. I'm down $3,151 or about 6%. Now, I started investing in these growth stocks basically at the peak. I started investing in these companies around March, and since then, a lot of these stocks are still down. But jumping into all the different stocks that I have, I'm going to go ahead and just break it down, share with you guys my bullish scenario around each one of these stocks. So the highest allocation stock and my biggest conviction is Tesla. I own a Tesla. I can't tell you guys enough about my conviction in Tesla. I believe this company is a hyper growth company that is literally going to change the world. It's going to change the way that we do things. Basically, with electric vehicles, Tesla's also focused on full self-driving vehicles, and they recently just came out with a beta version for full self-driving. Now, Tesla's also working on their own batteries. They're working on multiple gigafactories that are going to be opening up in the near future. Plus, they have a lot of other projects, including the Cybertruck, the semi-truck, the Roadster, the $25,000 car, and recently, they did announce with their superchargers, they're going to go ahead and open it up to the whole network, meaning any other car that wants to go ahead and utilize their superchargers. I believe Tesla's going to take advantage of that, where they are going to get some sort of fees from these other car companies to go ahead and allow people to use their superchargers. So there's so many different things going on with them, and I can just keep going on, guys, but I'm going to stop there with Tesla. So Tesla is my highest conviction. I have about 40% allocation there. From there, I have Peloton. I have a target allocation of 4% in Peloton, but overall I have the second most amount of money in the stock, which I have about $5,000 in this. I'm down about 8% in Peloton, or $347. Now from there I have Roblox. Believe in this company as well. This is basically another disruption company in the gaming field where you are playing games in a metaverse and you can be your own avatar and play with your friends. Plus Roblox is working on a lot of different things where they're having concerts in this metaverse world. So I'm up in this company $292, or about 8%, but my overall allocation in this is $4,400. From there I have Coinbase. I have about $3,700 in this company, down about 13%, or about $500. Coinbase is another one that I really do like. Believer in this company because they are the easiest barrier to entry when it comes down to the cryptocurrency space, and basically they're the easiest cryptocurrency platform to go ahead and use to go ahead and buy Bitcoin, Ethereum, etc. So Coinbase is going to be the next highest allocation. From there I have $3,400 in CrowdStrike, up 23%, or $618. This is basically a company that is focused on cybersecurity. From there we got Shopify. Love this company, love everything they stand for. Shopify basically makes it extremely easy to go ahead, create your own website and sell product on those websites, and it's a subscription model. So love this company. I'm up 46%, or $927 in this one, and we have about $3,300 invested here. From there, I do believe that Airbnb is probably one of the safer companies I have in my growth pie, but I still do believe that this company has 10x potential. But this is basically a company that's focused on the experience. You get a much better experience staying at an Airbnb as you do versus staying at a hotel. So I do like this company, like overall what they stand for. Down about 15% in this one, or $424. From there we got Netflix, around break even here. Have $3,000 allocated towards this one, and down about 3%, or $66. Netflix, I just see keeping the crown for a very long time. I believe when it comes down to streaming, there's nobody that's going to beat Netflix. They're just focused on producing more and more content, outbeating all their competitors. They are literally putting out brand new content every single week, and they're committed to producing more content and actually investing more in their content. Plus, they're also looking to get into the gaming sector, which is going to be really interesting. So highly convinced on Netflix. From there, we got Square. Square's basically a fintech company. They're in the crypto space, they're in the payment space, they're also in the banking space. They're literally changing the way banking works. Love this company as well. This is another disruption company. Up about 24%, or $450, and our target allocation is $2,500 in this one. From there, I am taking a little bit of a hit on Lemonade. Now, Lemonade is a company that I do truly believe in. I'm not going to go ahead and add more to this allocation, but I do sincerely believe in this company because I believe the insurance industry can be disrupted, and Lemonade is the one that I believe can go ahead and disrupt the whole industry. Lemonade is actually working on introducing car insurance, and they've had many articles around this, so I do believe that this company can go ahead and disrupt the whole car industry with insurance and with pricing their insurance. Lemonade currently focuses on homeowners and renters insurance, but I do believe once they get into car insurance, that's really gonna help grow their stock price and grow their demand. So I like this company, and I do like their branding as well. And then from there, guys, we have C Limited. Now C Limited, I have about $2,000 invested, or roughly around 3%, and we're up $460, or about 31% in this company. Do really like C Limited because they are diversified in 3 different areas. They do focus on banking and fintech space. Basically, they have 3 different companies under C Limited. They focus on C Money, which is basically a fintech space, financial services space. Then they focus on e-commerce with Shopee, and then they also focus on gaming with digital entertainment and with Garena. So I do see this company growing because they're focused on 3 areas that all have a lot of potential to go ahead and grow. So I am a huge believer in this company, and I believe this is another 100x potential company over the long term. Now, going from there, we have Twitter. Twitter, I'm basically break even. The investment I have is $1,857, and we are break even. Now, next we got Zillow. Zillow has definitely taken a hit because the housing market has really leveled out at this point. Zillow, we're down 23%, and my overall allocation in this one is about $1,800. And guys, jumping into the next one, we got Robinhood. Robinhood is actually the newest stock that I added in this portfolio. I'm up about 43%, or about $390 in this company, and I have about $1,800 invested. Robinhood, just like Coinbase, I believe makes it very easy for a new investor to go ahead and start investing. Plus, they offer free stocks when you go ahead and sign up with them. And I just like how their interface is so user friendly, where any retail person can go ahead and start investing in stocks, and they charge $0. So do like this company, do like what they stand for, and it's really a company that I believe can go ahead and disrupt another big industry. From there, we're going to go ahead and jump into Twilio. Twilio is another great company that I really do like. My allocation is $1,700. In this company, I'm up about 8% or $114. Twilio is basically a business-to-business company. If you're getting a text message from a supplier, or let's say you have a retailer that you're getting text messaging from, or any kind of marketing, Twilio's probably the one that's sending you that. They're a business-to-business platform that allows businesses to go ahead and connect with their consumers through text messaging, through emails, and other social media platforms. So like this company for the long term. From there, we got a couple other companies in growth. We have Uber. I'm down about 24% or about $382, and I have about $1,700 in this one. Again, another stock that's kind of been trading sideways for a little while, but I do believe this company has the majority market share, and long term, I do believe that this company has an edge over its competitors. And lastly, guys, I have Etsy and Pinterest. Both of these are actually different ways to go ahead and shop online with a uniqueness that both of these companies have. With Etsy, you can go ahead and get creative different things on Etsy. If you're looking for something creative or something unique, you can actually buy it on Etsy. Etsy, we're down about 15% or $240, or I have an allocation of $1,600 there. And then Pinterest, I have an allocation of about $1,500 there as well, and we're down about 23%. Pinterest recently went down a lot because their earnings were not as good as people expected. But I do believe that these companies do have a great future ahead because they are the leaders in their space. But guys, these are basically going to be the growth stocks that I have. All of these stocks I do really, really like. Now, I am focused on stocks that are really disrupting companies. Basically, I call them rule-breaking companies. Now, rule-breaking companies are companies that are basically breaking the rules, changing the way that we do things. So that's why I have a huge allocation towards some of those companies, including Tesla, Roblox, Coinbase, Peloton, Shopify, Netflix, Lemonade, Sea Limited, and the list goes on. But this is basically companies that I do believe are either breaking the rules or are the industry leader in their space that has the strongest potential for growth. Now, jumping from there, it's going to be in the technology sector. I have a total target allocation of 25% here. We're up about $10,585 in the technology sector. These are companies I started investing in early on when I started this portfolio. So my current value in the technology sector is $36,977, and we have 5 companies in here. Apple is my highest conviction company in technology. So my overall value in this is $20,000. I'm up about $5,489 or 6.28%. Really do like Apple. They are the innovator, and this is a company that I'm just going to keep on investing more and more in. From there, semiconductor company, NVIDIA, they're the largest semiconductor company. Huge believer in this one as well. I have a value of $7,093 in this one, up about 115% or about $2,900. From there, we got Microsoft, of course, one of the big dogs in the technology sector. I'm up 67% in this one or $1,462, and my current value is sitting at $4,300. From there, we got Google and Amazon, and of course, we've all heard of Google. Google, I am highly convinced in as well. I'm basically break even in this company. These two are actually newer companies that I added in the portfolio in the last couple months. So I have an allocation of $3,700 in Google and up about $500. And then Amazon, recently they had their earnings. Even though their earnings were great, people's expectations were obviously higher, so the stock did go down a bit. So I have a target allocation of $1,500 in Amazon and down about $42 or about 6%. So basically break even with that one. So these are going to be the companies in the technology sector. Now, overall, I have about 34 total companies. Now, we've went over growth and technology. Next is going to be financials. Financials, I basically have 2 companies. I have JP Morgan Chase, which is the largest bank out there. They're also in cryptocurrency. They're also in private banking, and they have the most amount of branches under Chase Bank in the US. So I do really like this company because it really focused on technology and making things easier. Up about 66% in this one, or about $1,100. Total value in this one is $5,137. And then we got American Express. American Express is another company that just have a very strong brand. like this company a lot as well. My total value in this one's $3,384 and up about $1,400 in American Express. Both of these companies do pay out a dividend as well, so that's extremely nice. But now jumping into the next one. The next one we got is going to be real estate. Real estate, I have two companies. Both of these companies, however, are going to be in the retail sector, meaning these are big landlords that go ahead and rent out their space. They have triple net leases, so once they go ahead and do the updates to their spaces, they go ahead and turn all the cost over and all the updates over to the tenants. So these companies are just making a ton of money because they own the land, and after that they put all the expenses on the tenants to go ahead and keep up with all the improvements. But I have two companies, Store Capital and Realty Income. Store Capital up 37%. Overall value is going to be $4,600 and up about $1,000 in this one. And then we got Realty Income up about 32% or about $1,200, and then the total value is going to be about $3,700 in this one. So huge believer in these ones. Realty Income is actually a monthly paying dividend stock, so I really like that one. Store Capital is an investment that Warren Buffett actually owns. I believe he owns about 10% of Store Capital, and I do really like this company. These are both basically a bit safer companies in my opinion because they're considered real estate investment trust and they own real estate, and that's usually a safer bet compared to some of the other sectors. Now jumping into the next one is going to be consumer discretionary. Consumer discretionary, we have two companies in here as well. In consumer discretionary, my current value is sitting at right around $8,000, up about $2,900 or 80%, but I got Nike and Target. Both of these companies, brand-wise, second to none. Nike is one of the top 3 brands out there. We're up about 93% in this one, or about $1,200. Current value is sitting at right around $5,000. And Target, they're one of the best brands out there. People love Target, honestly. Don't know too many people that don't like Target. Actually, don't know anybody. So I really do like this company. I believe Target still has a long ways to grow with their branding. They're coming out with their own unique products that are branded as Target, and it's just a company that's really in favor with consumers. Now, my current value in this one is going to be about $3,000, up about 66% or $1,000 in this one. Now, we're going to go ahead and jump into the next sector, which is going to be consumer staples. Consumer staples is about 4% of the portfolio, have a current value of about $7,000 and total gains of about $1,500 or 34%. And we got two companies in here. We got Costco, which is basically the largest wholesale distributor in the US. Then we got Cisco Corporation. Cisco Corporation is one of the largest companies when it comes down to distributing products for retail businesses, including restaurants and hospitality space. So like both of these companies, Cisco is extremely competitive with their pricing, and Costco is another one of those brands that consumers just love. Both of these companies actually do pay out a dividend as well. Now, my current value in Costco is about $3,700, or I'm up about 48% or about $800. And then in Cisco, current value is sitting at about $3,200 and up about $435 or about 30%. Now let's go ahead and jump into the next one. Now we got 3 other pies here. In the communication services pie, I only at this point have one company because I do believe this company is the best company in the communication services sector. And this might be a surprise if you haven't seen this company in my portfolio before, but the company that I have is Disney. Disney, I'm up about 26% or about $450. Current value is sitting at $5,764. Now, Disney is extremely diversified. They have theme parks, they have their cruise line, plus with Disney Plus, I do believe they are going to be one of the biggest competitors for Netflix. And in my opinion, in the next 5 years, I do believe Disney is going to overgrow Netflix. Now, I'm not going to say that Netflix is going to be the number 2 spot, but I believe Disney is going to really give it a run for its money. So I really do like Disney, like everything about the branding. This is just a long-term great company in my opinion, and a company that I believe is a bit safer all around. With the pandemic, this company did get hit, but they are bouncing back, and this is just going to be one of those long-term holds. Now, we're going to go ahead and jump into utilities. And in utilities, I have one company as well. And this is going to be with NextEra Energy. NextEra Energy does pay out a dividend as well, but this company, when you go ahead and compare it to its peer, they are the leader when it comes down to wind energy, solar energy, and any type of renewable energies. Up about 25% in this one, or about $500 with a current value of $3,181. Now, jumping into the final one is going to be a company in healthcare, and I only have one company in here as well, and this company is going to be Abby. Abby, I have a current value of $2,812, up about 37% in this one, and about $400. But guys, these are all my companies that I have in this portfolio. If we go ahead and look at my holdings, I have 34 stocks in here, with my highest stocks being Tesla, Apple, Nvidia, Disney, and JP Morgan Chase. Huge conviction in all the companies that I have in my portfolio. I like to have this portfolio split up into growth and dividend stocks. The reason for that is because the growth stocks are basically the stocks that I believe will increase the value of this portfolio the most over the long term. These are going to be companies that focused on hyper growth, meaning 10x to 100x growth potential in the next 10 years. And then from there, I have stocks that are broken up into dividends, and those are going to be in all the other pies here, which are basically stocks that are a bit safer, but that let me go ahead and go to sleep at night, where I know I'm not going to lose a lot of money overnight. And at the same time, these companies are paying me out passive income, and that's how I'm getting my dividends in this portfolio, because I'm making some extra money that way. But this is going to be every single stock that I currently have in my bucket list portfolio. So if you want to go ahead and keep up with this portfolio, don't forget to subscribe to the channel down below. Every single week, I like to go ahead and show you guys the value of this portfolio, keep it fully transparent, where if I go ahead and make a purchase, I'll just go ahead and tell you guys right on this channel. But thank you for watching. I'm going to leave it at that for this video. Until next time, guys, I'll see you guys at the next one.